What's going on, you guys? This is Aaron Scott shooting this quick video to go over Euro JPY, do some technical analysis, and more so go over some key points in how to read the charts, how to read the markets, and how to know when to get in or out of a trade. Right now, we're looking at Euro JPY on a 4-hour chart. And one of the main things that people want to consider if you're learning Forex or looking to learn Forex is that the price or the charts is going to speak to you. It is a different language, it's a foreign language, but once you understand the language, you know what the charts is saying to you. Therefore, you can comprehend and you can utilize it as confirmation so that you know when to get inside of a trade, when to profit in a trade, and that way you're not getting caught up in the trap, getting caught up in drawdown, consolidation, things of that nature. So I wanted to go over some simple basics, mainly not just for the Winner Circle group, because we have our own inside group, Winner Circle group, that's connected to the leading source of education. But we also wanted to share our education, our knowledge, and our strategies. We do have multiple strategies that work, but we wanted to start sharing value to anybody that wants to learn how to trade Forex. So right now, what I'm going to share with you is the importance of support and resistance zones, and when to know when to get inside of a trade depending on where the market is at. So right now we are looking at Euro JPY on the 4-hour chart. Like I said earlier, we have this zone right here, which is our floor. This is our support. As you can see here, it came down, used it as support once here, came down, used it as support again here. So this is the very low. This is our floor. We have our midpoint here, which is this yellow box. We'll get to that in a second. And we have our ceiling, which what we call resistance at the top. You notice it came down. It used it as a ceiling here. It bounced once, twice, came down all the way to the floor, came back up to the ceiling. It bounced, came back up to the ceiling again. So as of right now, this is where we're at in the market as I'm doing this video. And when I finish with the video, I'm going to share with you the results maybe in a couple of days, because this is a 4-hour chart. So maybe sometime next week, I'm going to do an updated video. That way you can see where the market actually moved. And right now, we still don't really know where it's going to go. But from this point, depending on what the market does after this point, then we'll know whether we're going to get in for a sell or for a buy. And I'm going to bring up both circumstances so you can see what I'm talking about. So now right now, like I said, we drew this box using our rectangular box to draw this zone because we know price reacted to this area multiple times in the past. And then we have the bottom zone. So if it does break down, we know that at least it's going to come to this midpoint, which is this yellow box. Just like it reacted from the resistance here, it consolidated all in this area at the box. It tried to come back down, came back down, it went up a little bit, came back down, and never really broke this zone until here. It broke through the zone, then it came back up, as you notice, and started the process all over again. It came back up to the top, came down to the midpoint, consolidated, jumped up just like it did here, jumped up, came back down, consolidated again. It tried to break through like it did here, but it didn't. It went back up to the top. Usually the market tends to repeat itself. So if we were to get an engulfing candle, and I'm gonna show you what an engulfing candle is. An engulfing candle is something similar to this candle right here, where you get a large movement, where you get consolidation going to the side, or you get small candles going up, and then you get a large candle going in the opposite direction. That is showing you from price action, this engulfing candle is showing you that it is a change in direction. So the change in direction, and it's coming down, and it's coming down. Here again, you see a retracement up, you get an engulfing candle down, another retracement, another engulfing candle. So these large candles going down, is showing you that it will go down. You don't really see too many big candles, green candles coming up this phase. All it is just retracements, engulfing, consolidation, engulfing all the way down to the bottom. Then you have an engulfing candle to the green side. So that's when we know that we have a floor, we can get out of the trade. That's if we were to take the trade here. But that is no sense of taking the trade here because we didn't know from the past that that was going to be support and resistance. But as we move forward and we notice that this engulfing candle came up to the top at this zone and it stopped and it consolidated, that is more so just to finish the orders of the buy. and to pull more buyers in so they can get ready to sell. Because in the past, once it got to the zone, it reacted and it came down. And that's exactly what it did. We had consolidation. We had a small candle to the downside. We had another to the downside. This can be considered an engulfing candle. It's not that big, but it is engulfing the candle before it. And engulfing basically means that it is bigger. The body of the candle is bigger than the body of the candle previous. And I'm gonna try to pull it up so we can see it. Let's go see if we can go back real quick and kind of zoomed in so we can see it. Um, you have it going up. Then right here you have a candle that's much bigger than the previous two candles. That's considered an engulfing candle in a sense. It's not that big, but it is engulfing. For the past 8 hours, this candle moved down much more than the whole entire range of these last two candles. So it decided to go down. It came down to the neckline or to the midpoint, consolidated, consolidation, and we're back up to the top. So what I would look for is, like I said, another engulfing candle to the downside. If I can get an engulfing candle to the downside, something similar to this, because it happened in the past, if we can get a couple of candles like this, and I will go ahead and take a sell at least to the neckline. Now, if you want to, because this trade, being that this is a 4-hour chart, I'm going to bring it up so you can see this. This trade is a potential 600 pip trade. If it goes from the top to the bottom, or the support, I'm sorry, from the resistance to the, just like we are now, we're at the very top. If we were to get a ride and it breaks through the neckline from where we are now all the way down here is almost 600 pips. So what I would do is I will wait for an engulfing candle to get out of the zone, wait for a retest. That's the best thing to do. You don't want to just jump in blindly. You want to make sure that the market is in fact going in your direction. So what you want to look for is a retest, something similar to what happened down here at the bottom. Notice how it came down. You got your engulfing candles up. You don't want to jump in on this candle because it can come right back down just like it did. It came down to retest. Once you got here and you see this candle, this engulfing candle, this is when you get in the trade. You will put your buy order or your pending order at the top of it and wait for it to activate. It activated here. It kind of stalled. Eventually you ended up in profit, and it jumped up about 400 pips. If you had to put your pending order in here based off of price action, you have this large wick to the downside. It tried to come down, and price ended up pushing it back up. And then you have this engulfing candle coming a few hours later. So you would have jumped in or put a pending order in near this area here. I would have probably put a pending order in somewhere near this area here. Waited for it to activate. It activated here. You got your pullback. And there you go. You're into profit, 300, 400 pips. So what I would wait for is a break or an engulfing candle that swallows this entire candle. I would probably put a pending order somewhere near here, right below this candle, and wait for it to get to the neckline, because eventually it's going to come down and at least get to the neckline. Now, for the safe traders, this is what they usually would tell you to do. If you understand candlestick patterns, we're looking at a possible information coming into play. I don't know if you can see it, but this is basically the M here. It comes up. Let's see if I can draw it out with some trend lines. You got your M pattern. Oh, that's not the right line. I didn't need that. Some people may see it, some people may not be able to see it. You have an M pattern, you have it coming up. It's coming down, right? This is the neckline. I wish I had a drawing tool for some reason. I don't know why I'm using this, but hopefully you can see the M pattern. Went back up to the top. Now we're anticipating it to come back down. If you see if I can get, why are these rays? Let's see, properties. I don't want a ray. There we go. You got the M going up. You have it coming down. Came back up. And now we're anticipating this move back down. As you can see, this looks like a perfect M pattern. And you will see these patterns all day, every day in the market. You will get M patterns from the high, W patterns from the low. And just to show you that this happens all of the time, I'm going to go into past so you can see them. M pattern, up, down, up, down. W pattern, down, up, down, up. M pattern, up, down, up. Catch the sell, down. W pattern, down, up, down. Double bottom, catch the sell. I mean a buy, up. Here's another W pattern at the bottom, down, up, down, up. It happens all of the time in the market. So that's basically what here goes another M, up, down, up, down. Here's another one. And here's another W, down, up, down, up. Even within the M, we have a W. So we're anticipating an engulfing pattern. And if this pattern continues to fall, it will be a 600 pip gain. Now, if it doesn't, if it continues to go up and it breaks out of our zone, this is what I want to see. This is what I want to see. I'm not going to get in the trade if it breaks the zone. I want to see it come up. It comes up right here. Then I want to see market do this. I want to see it come down like this, retest, back down past this low, and nothing like that. I wanted to come to retest halfway, a halfway retracement. If it does a halfway retracement, we're still good. You can utilize your Fibonacci retracement. You got the 32.8, you got the 50, and you got the 61. So you utilize that as confirmation. And if it comes down and it comes down to at least the 50, this is what you're going to see. And you're going to see it go back up to the upside because it breaks the zone. If it breaks an important zone, you wait for the retest. If it retests and it comes down 50, maybe 61.8%, and it doesn't go any further than the previous low, you go ahead and go in for a buy. So we're looking and waiting for price to react at this zone. This zone is very important. We're either going to wait for a sell, we're going to wait for an engulfing candle, maybe even a retest here, and ride it down 600 pips, or at least to the neckline of your M. Your M goes up, it goes down here. This is your neckline in this area. So if you're a safe trader and you wanted to go down to 600 pips, you will wait until it breaks this area. If this is going to form a full M, it has to break the neckline first. The more risky traders, they'll probably take it at the top, ride it to the neckline. But if you're a safe trader, you will wait for this sell at the neckline. If it comes down to the neckline, continues to go down, then you could take a sell. But if it breaks out of the zone to the upside, wait for the retest. And after the 50 or the 61.8% fib retracement, then you jump in for the buy. So hopefully this video was of help to you. Basic technical analysis on trend lines, support and resistance, when to get inside of a trade depending on price action at important zones in the market. So I see you guys in the next video. Have a blessed day.